Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, December 20th, 2015. So, I'm not going to lie to you, Friday definitely took me a little bit by surprise. Didn't really see, I was expecting that we could get, some additional weakness, but not what we saw, not 2 days in a row like that. So, I still believe that we are going to get a Christmas rally, and it probably could start as soon as Monday. And I'll show you my reasons why, not just because I'm long, but there's reasons to look for it. But like I said, this definitely is not going as planned. I didn't anticipate a drop like we've seen over the last 2 days. So let's get started on reasons why I think hanging short and pressing that right now is asking for trouble. First thing is the Nemo. And just notice, whenever we have it, we've come off of this line right here, we've had very, very big rallies. Now, it's come off, and you can see that we're nowhere near where the sell part of it is. And there's another reason that is, I was showing you this fractal pattern. And this is going off of the October 2014. So we had 1, 2, 3, 4, 5, 6, and then there was a 7. So 1, 2, 3, 4, 5, 6, which, remember, had a double bottom here. Very similar to what we're looking at here. So if it's going to follow this pattern, we would anticipate that we should get a test back up to the highs that we had on Wednesday. So again, it's not that it's guaranteed that it's going to follow this. This is just something to keep an eye on. But we're what we're seeing with where the the indicators are, along with the Nemo, it would make sense that if we do get that. Now, another piece of information that we want to watch is the money flow. And if you notice right here, the spiders had a massive buying on weakness on Friday, and almost to, like, you look at the block trades right here, it's compared to the tick up to tick down, it's enormous. So there was some heavy buying going on, even as the S&P got absolutely smoked. So it's another reason why, again, you really don't want to be pressing the short side, especially when you have block volume and a lot of big boys buying the weakness on the SPY, and then also with the Nemo count that's here. So those are really reasons why I do believe that we're going to get some kind of decent rally. Santa isn't not going to come visit. We're going to get the move, and it's probably, like I said, it could start as soon as Monday. Maybe we get a little weakness early and then they run it, but in any case, I still believe that we have a pretty nice rally pending. So let's go to our charts here. And this is just a 5-minute chart on the S&P. And the reason why I'm showing it is it looks like we're also within this channel right here. So if it needed to come down and touch the exact bottom of it, we're looking at a move maybe down to the 202 level, but that's not too far from where we are. And if it's going to run to the top, we would be looking at a move that would be a test of the previous highs, and that's what I was showing you with that fractal pattern and what it's looking for. So as far as what the bulls need to do, really the first, you could see here that the two areas they have to clear is going to be the 2041 and the 2049. If they get above that, then I do believe that we're going to be coming back up and testing this area here. If we take a look at the daily chart, now this is, the fractal pattern, not the fractal, the wolf wave that I've pointed out in both directions. And this is actually a pretty bullish wolf wave, because you can see with the yellow dots here, we have 1, 2, 3, 4, and then 5, it could go, someplace in this area, wherever it is. But that's looking for, again, a test of these lows. But if the pattern plays out, then this is the target area. It's going to go back up with your with this low here and this high, and this is the target. So that would, it, depending on when it gets there, let's say they have a massive 3-day rally, then we could be hitting the top here. But if it drags out into the end of the year, the target would be looking someplace up at the 2117 level. If we take a look at the 60-minute chart, we had some bearish divergences. I just, with the seasonality and everything there, I wasn't anticipating to see this big of a drop. But, it surprised me. This is massive on it, and we've almost given back the entire gain that they had off of these lows. But, I've given my reasons on why I believe, these lows could hold and we can come back up to this area here. So, getting pretty close to the oversold level, but not really there yet, which is kind of surprising, because you can see we got pretty close to the overbought levels on this move, and we've pretty much given it all back, and there's still some more room to go before we get into the deeply oversold levels. But in any case, we did, the bulls really have to defend this area here, and then again on the upside, anywhere from that 2036 up to the 2041, if they get above that, that's when we're going to be anticipating the move to come up to this way. 15-minute chart, we do have some nice bullish divergences that are formed, very oversold right here. And we actually have 1, 2, 3, 4, 5. So it makes sense that it's going to find some kind of low and then at least retrace. And again, what we're looking at, first targets would be anywhere between the 2044, 2056. But if the pattern is going to play out, then we should see the S&P testing these levels up here probably within, by year's end. So with that, like I said, this definitely is not what I was anticipating. Took me by surprise. But the one thing that we have to understand in this market is that you can, be deeply on the wrong side, and within a couple days you're back in the money. It's just moving really fast. So I do believe we're going to do all right with the positions. It just, like I said, didn't really go as I was expecting. So with that, have a great night, and I'll talk to you guys tomorrow.